Hello, welcome to today's webinar, The Data Dilemma and Why Your Greenhouse Gas Emission Strategies Can Potentially Stall at the Collection and the Verification of that data. We're deep into reporting season, so the topic is ripe for the taking. I want to introduce myself. My name is Christy Pooler, and I lead the product marketing team here at GE Vernova for the electrification software division. And primarily emissions management is my focus. So a few housekeeping rules we can walk over is that the webinar is being recorded and everyone is on mute, so there isn't any audio that is enabled on your system. And if you have any comments or questions, please use the Q&A box to the right that's in your toolbar, and that will answer a question. We'll try to answer it live via chat, or we'll get back to the questions either during the webinar in the Q&A or through email. And also there's additional content that is available in the Resource Center. Here you will see access to the report that we will walk through during today's webinar. Also, you'll see a data sheet and product content on GE Vernova's serious emissions management software as well. And then you can access additional resources through our company web pages and additional papers that can help you in your decision and also help you within your overall roles and responsibilities at work. I introduced myself, Christy Pooler, but I'm going to pass it to my partner, Beth LaRose.
Thanks, Christy. My name is Beth LaRose. I am one of our leaders in our consulting services business. I'm really focused around the areas in terms of carbon management, which cover study work and customer solutions in regards to really kind of everything around carbon, environmental, energy transition studies. And I'm really excited to be part of the discussion today with Christy.
Thank you, Beth. All right, well, let's get into the meat of the webinar. It's all about emission strategies. We understand over the last few years, looking at becoming more sustainable, really looking at your decarbonization practice to focus on how your greenhouse gas emission strategies can really move forward, to lower your footprint. And if you have net zero goals or specific emissions targets, also looking at your energy efficiency. So really taking a look at your current operations and how to become more efficient, which eventually lead to smoother operations, better performance, and of course, lower emissions. And of course, the regulatory requirements and standards that the globe is starting to see more and more countries within Africa and Asia that are jumping on board to really tighten up some of those corporate disclosures and emissions management. So not only with the compliance issue and internal processes, but also looking at other stakeholders. One, for example, people are looking at emissions to focus on better data that enable better strategies for your stakeholders up through leadership, not only with regulatory, but also even with investing and finance. So it's a bigger scope, and more constituents are responsible for the lower emissions. So with that, the importance of emission strategies for energy and heavy industrials, we commissioned Forrester Consulting to our audience, over 279 global sustainability respondents that helped participate in the survey. And the industries really targeted are energy companies, heavy industrials, chemical, oil and gas, power generation, mining, and metals companies. So it was a very targeted survey and questionnaire. And some of the key findings that we received is that strategies are becoming more process-driven, not only internal processes, but also really focusing on your external processes in external case studies or external usability studies. And so it's not about the quick wins, that really focused on either carbon offsets or some other quick wins to reduce emissions, but really looking at the operations as a whole. Also, the most challenging aspect of implementing carbon emission strategies is the collection. We see a lot of our customers that it's not only collection from a pure data perspective, but there's different data silos, there's different data methodologies across different jurisdictions that could be different. So really looking at that overall process and the complexities of collecting and then verifying that data can be very overwhelming and complex for some of our customer sets. And then also, looking at some of the key findings around emissions management software. So not only what you're using today, but where do you see software coming in the future to help break down some of those silos and minimize some of those complexities, like emissions management software. So let's get into some of the results. So I mentioned just based on performance-based targets, emissions, now how organizations are enabling sustainability into their overall process, which I mentioned. So emission strategies are evolving, instead of, like I said, purchasing offsets, they're really building out more comprehensive long-term, you have short-term strategies and long-term strategies for emissions. So we asked the question of which of the following are included in your greenhouse gas strategies. And as you can see is that, the industries are still leaning on looking at more sustainable energy resources, power, wind, and other types of technologies, for example, like carbon removal, and then also that production process. So getting more mileage out of your existing Scope 1 assets, your existing infrastructure, et cetera. So those are the top three of what they're looking at holistically to hit their targets. But then we also ask the question of what if you didn't meet your targets or you didn't meet your goals, and what types of consequences that you see that can result of those targets. And of course, the number one is looking at our customer set, looking at their satisfaction. So when the leadership puts out net zero targets, we're really looking at lowering our emissions for our overall product, et cetera. So 73% are really concerned about their perception in the market, and especially with their customers. One of our customers mentioned in the Colorado region is that when we were working on their implementation, a lot of the times is that they've worked really hard to get the confidence from their customer. And if you fail to meet the expectations that they presented, can be catastrophic, and it's very difficult to get that reputational damage and correct that. So that's an interesting tidbit that we heard from one of our customers, and it really starts to resonate. And also potential fines and penalties. So the regulatory landscape is changing dramatically around the globe, even within the United States. And so it's really important to maintain course, and Beth will get into some of the additional research that we've seen, but also on time and have a verification process. So with that, let's go ahead and have an open discussion. And Beth, there's a few questions that I wanted to ask you to get your perspective on the market. I'm building an effective GHG reduction strategy. What are the key areas that should companies prioritize and plan for the short term and the long term? What are you seeing?
Yeah, Christy, you kind of touched on it a little bit earlier in terms of this overall process and being part of the strategy. So what we're seeing is that companies are really, starting that process with their strategy. The corporate strategy is kind of dictating overall sustainability goals, and those sustainability metrics are becoming a board level priority. So it's a priority for the entire corporation to meet these sustainability goals and metrics. And so in taking those strategic steps, it's really touching all aspects of the organization in terms of how they can incorporate sustainability into their operations, as you mentioned, and into planning. So for operational efficiencies, one of the things that we see are key areas to really address are around the business processes, and also then contemporizing their technology. So this is really upgrading technology, for instance. But we see deploying lean process improvements, for instance, that take into account an overall business process or an industrial or manufacturing process to really get those operational efficiencies included, to be able to effectively reduce emissions out of that specific process. Upgrading assets with current technologies that really also takes into account improving the energy efficiencies. And this could be in the case of a lot of our customers with power generation, for instance, or even transmission or distribution technology. We're improving the efficiency of your overall process and system, thereby reducing your emissions. Also updating software and control systems. This is really important, I think, aspect to, again, having that overall system approach to reducing emissions and fulfilling the company metrics for reduction. Finally, one of the key areas we're seeing that's really starting to, I would say, be more commonplace is deploying AI and digital twins for predictive maintenance, for instance, and really using that kind of technology to help optimize emission reductions, really putting that into part of the process. So one of the other additional areas that I'll just comment on quickly is, to further decarbonize an entire portfolio, this also will take into account power purchases, for instance, moving to more renewable technology or renewable purchases from things like wind, solar, hydro, using greener fuels like hydrogen or other e-fuels, or switching even from coal technology to gas or biofuel generation. A lot of the companies that we are working with are also very energy intensive, as you mentioned. So they're using emission management software to help track Scope 1, Scope 2, and Scope 3 emissions, including real-time monitoring of their technology and those emissions to be able to make better decisions in the future. And finally, the last comment I'd make here is that we're seeing an increase in the number of companies that are tying their executive compensation to their sustainability targets. So this whole process of sustainability is really part of the corporate initiatives at this point.
Thank you. That was very comprehensive. Appreciate that answer. So the second question is, what do you see the biggest risks of not meeting their targets or meeting their goals?
Yeah, you mentioned a couple of things already in terms of like reputational risk and losing trust potentially with their customers. Once you're making this public commitment to net zero or carbon neutrality, then that creates expectations, right? So not meeting those targets could erode trust with stakeholders. It could, erode brand equity, for instance, or customer loyalty. A couple of the other risks, and you referred to this one as well, around regulatory exposure. Certainly if companies are falling short of their targets or are not able to make, complete reporting, for instance, they may face fines or penalties that could result in losing operating permits, that could result in having to take output reductions at certain facilities or even facility shutdowns. So really compliance with the regulatory targets, this could trigger other complications with their business that's unintended if they don't meet these. Financial risk is another one where investors are increasingly scrutinizing the emission performance of our companies, and companies that miss their targets may lose financing, for instance, that's linked to decarbonization, or incentives that are linked to specific projects or attaining specific reduction levels. So this could ultimately result in financial impacts, as well as things like decreasing of financial ratings or company valuation even.
One of the things, and I'll just dovetail on that, is even with some of the regulatory that require third-party audits. So if your failure to submitting or having accuracy in your audit, that can increase costs as well, increase certain risk, and also depending on where you're exporting, if you're not complying on a jurisdiction level, that could impact your ability to sell into certain regions. Do you see that as well? Yeah.
Yeah, those are all risks that we're certainly seeing.
So it's pretty comprehensive, not only just fines and penalties, but
Exactly.
overall operational risk and financial risk. The next section of the report is about managing emissions is the biggest barrier. So I mentioned that a lot of scope 1, 2, and 3 are different data silos, different calculations and methodologies, which could be a hindrance of the overall collecting your data, but also the need to have more near real-time status of where you are and where you are in the performance of your current strategies, but also what's the impact of your future. But the two things that we see from this research is that the overall collecting scope 1, 2, and 3 is continuing to be a challenge, rather it be data connectivity to other systems, rather it be still using spreadsheets and other data files. But the second one that we see is the verification and the validating of that data. So some of our customers, they're able to collect, and they've processed a lot of the data, whether it's embedded in your architecture, but also it's the third-party verification, having to go line by line, and there's still a lot of manual processes to verify and validate that data that's ready for reporting, or also for reporting out to various stakeholders. So that's been a really big barrier that we see, not only from our customer set, but also from the survey. And also the management of it is important. And when we say management, is that not only you have your priorities in achieving the emission goals, but also how critical it is to your business. So for example, there was a couple of quotes that came from the survey, was that they understand that it's critical, but they specifically said the validation of our data ensures that we make informed decisions on our emission strategies. Again, it's the confidence of the data that's coming in, and how do you leverage and use that data in order to make better business decisions around decarbonization, around production. And then also having that regular reporting allows us to evaluate our success. So it's not just all about the government, but again, as the corporate goals and emissions as it stands, and giving a clear picture of the progress. So again, that data verification is very important. But also when it comes to the challenging part of poor data quality and the lack of it being available in real time is one of the challenges as well. And then of course, collecting, they're at the mercy of the end customer, and then sometimes from an OEM perspective. So again, it's across the board of, yes, it's challenging to collect, but how critical having the accurate data is key to the success of their strategies. So again, the same format. So let's discuss our findings, but also, your opinion too on this, Beth, is that what are some of the other internal factors making collecting, verifying, and reporting emissions challenging? And what do you recommend to mitigate some of those risks?
Yeah, of course, as you mentioned, the silos of a company are certainly one of the challenges that we see pretty regularly, especially if you're in a big company such as we are with GE Vernova. But often because like companies, bigger companies have multiple ERP systems, for instance, that don't talk to each other. So the data collection systems are not necessarily uh, easily, talking to each other so that you can compile that data. There's also different standard reporting methodologies. So another factor there is that one team or one business line may be using one set of methodologies, especially if they're in a different part of the world for global businesses than another part of the business. And so trying to kind of benchmark and make sure that you're using the same methodologies is really important. The other challenge that we're seeing is that sometimes the data will be missing for various reasons, either because the data collection was incomplete or there were some sets of errors in the data. And so understanding how to fill in those data gaps is another really important aspect of this collecting and then ultimately verifying that data, right, and reporting it. So some of the actions that we've actually taken with some of the teams I work with within our company and also with some of our customers is really creating that standard process that includes not only the data collection process and how you're going to ultimately report it, how it's going to be verified, but the systems and the tools that go along with that, including the software and the technology to even link different databases or data sets together. Because as you mentioned, Christy, like what you really want to get to is being able to use that data to perform analytics that can really help inform your decisions, right? You want the high fidelity data. You want that for reporting out and making sure that everything is correct there in your reporting, but also you really need that to inform your strategies. That information and that the data analytics that come along after you have that high fidelity data set is really important to make sure you're taking those strategic actions and moving your strategy forward in terms of your reduction strategies. So it's a really important aspect.
You may have, I think you touched on this as well, but are there any other ways that good data can drive stronger sustainability strategies?
Yeah, the predictive analytics is an area that we are really finding is more and more important because the decisions that we're making in our businesses now to reduce, or eliminate greenhouse gases involve really capital intensive equipment or investment decisions that are going to last for years. So you want to make sure that you have the best data available to you to inform those decisions. So this is something we think is very important. This will really help take, also once you make those decisions and you're putting your projects into place, having the data to then go back to your forecasted results or your project pro formas to take that information and be able to use that then to see is the project delivering what is intended? Am I actually making the reductions that I thought I was going to make? Is the value of the equipment or is the particular, say, purchase power agreement, are those working for me or do we need to make further adjustments? We also think that this is a really needed component in terms of informing risk mitigation. So once we understand our data and are able to see the trends, for instance, over time, be able to see the impacts of specific projects that were taking place, we can then use that to identify where do we have other risks in our overall strategy, how do we need to look at mitigation for greenhouse gases, and then even where do we need to start looking at adaptation plans. So again, this kind of data needs to feed into our overall sustainability strategy, which is often our corporate strategy.
And I'll go a little bit further on that, which thank you for that answer, is that whenever putting that sustainability strategy and understanding what the impact and the cost associated with implementing that strategy, taking that verification and taking that reporting even to investors. Investors are now starting to look at can you verify that the projects you put into place will make the impacts that you're forecasting and projecting? And so they're looking for some of that confirmation as well in order to allocate capital and bring in investors to invest into your programs as well.
Yeah, very good point.
All right. So the next topic is about existing emissions management software. So we look at this as that, emissions management is not built the same. They're all variant in not only just on collection reporting, but what are they currently using? And I mentioned that earlier in the session, is that they can be using some antiquated approaches, again, data silos, et cetera. But where they see that their emission software is managing short is looking at the production, because at the end of the day, they have to get the products out. They have to, submit the power that's needed for you and I to turn our lights on. And I'm in Texas, so it gets quite hot here, and I can be pretty cranky. So it's keeping up with production, but also your emissions goals at the same time. So that's a big challenge for them, and that's where they're looking for software to help with that, not only demand, but also emissions at the same time. And then secondly, of course, is the improving data validations and verifications. So, looking for ways to help that verification. And then the ROI of the emissions technologies, which we mentioned, is about, okay, what exactly is the approach of our decarbonizers that we're planning on, but what's that impact long term? So not only that they're falling short, but during this survey, the decision makers are looking to upgrade their emission software. So you have former EMIS or other systems that were around EHS software that are falling short, and they're looking for something more modern and more advanced. Not only just the automation of the collection, but kind of putting into, they're seeing, you mentioned AI. So yes, there's AI data centers and other things, but now organizations are looking at AI to help them with the verification, the machine learning, modeling, predictive analytics that you can visualize through digital twins, that really help with the verification of that data. And also, you mentioned scope 1 in some of your current and existing assets too, is what we're seeing in our customers, that they're looking for. You have asset performance management that you're already using in your organization. So where's that data tie-in? So you can really drill down into scope 1s, but also look at your maintenance and corrective programs and reliability programs in parallel with your emissions management. So that's been extremely desirable, where you can really extend emissions management into that overall production and operational management. And also measuring your performance. So you set your KPIs and you set your goals. Now it's looking at software to help monitor, and you mentioned it perfectly, Beth, is what is really impacting where your performances are today with decarbonization, and also that forecasting and other insights of where you are today. And again, is it working? Yes or no? And where do you need to pivot and make adjustments in order to stay on track and stay on target? And also, you mentioned the operationalization of your strategies. That's a really big word, but that folks are looking for software that enable them or guide them ahead of time of where to invest. Looking at different energy sources, which you mentioned, which are long-term and can be costly, but also what's that impact? And other abatement levers, if it's operationalizing your current, like you said, moving from coal to gas. There are ways that within a more modern emissions management software that you can adjust and calculate those ahead of time, so you can visualize that forecast and where to make those adjustments or make those investments. So the final thoughts, and these are some pretty hefty questions, because we know geopolitically and where emissions is going from previous years and moving forward. With the shifting of geopolitical priorities in the United States, are energy or industrial companies continuing their priority on decarbonizing commitments? Some by 2035, some by 2050. So we've heard a lot of chatter in the market. What are your thoughts on that, Beth?
Yeah, absolutely. We're seeing companies continuing to look at their decarbonization commitments on these pathways to 2035, 2050. You know, we all recognize that the world needs electricity to power our economies, and that we need to deploy all sorts of technologies and solutions at scale, right, to meet this growing demand, the demand for electrification of transport and heat, the growing demand for data centers and computing power that is being led by AI, and the expansion of industries. So this electrification is really going to help drive innovation, drive system efficiencies, and then ultimately decarbonization as we look across this whole spectrum of technology. So we're absolutely seeing a commitment from companies across the board to continue along these pathways to electrify and decarbonize their systems. One of the data points we have is PwC recently released their 2025 State of the Decarbonization Report, and you can find this on their website. But they looked at CDP disclosures and found that from those analytics that they did, that over 37% of companies responding to the CDP disclosures were increasing their climate commitments, and only 16% were decelerating their goals. So, you know, these are pretty impressive statistics around companies that are continuing to prioritize their decarbonization efforts. It's a pretty, I think, powerful set of work that they did, and it's consistent with what we're hearing from our customers and across our stakeholder groups when we work with.
Great. So not only in the United States, but there was some chatter about the latest omnibus proposal from the EU. So how is that impacting industries, and what are you hearing around that?
Yeah, in terms of the EU omnibus proposal, we know that it really is aiming to clarify the sustainability regulations. So they're looking to streamline requirements, reduce administrative burdens for things like CRSD, the EU taxonomy, CBAM, et cetera. And in fact, this past week, we understand that there's an initiative they're calling Stop the Clock by effectively postponing some of the reporting and obligations for some companies. And these are generally based on size and number of employees, revenue, et cetera. So the main point of this is currently to delay largely the impacts for sector-specific European sustainability reporting standards. So this is giving companies more time to comply. And so while we're seeing that there's companies have additional time to prepare, we do see that there's some slowdown in momentum in sustainability-related activities. So as firms, assess how they're going to meet this regulatory framework in the EU, in this case, they're going to, be able to take some of this time to see how they can best implement the necessary processes and technology efficiency deployments, et cetera. So, quite often when we have instances like this where there are changes in framework or in this case, some of the delays that are occurring, we do see a little bit of a slowdown. However, overall, we're still seeing commitment to those mid and longer term strategies for decarbonization.
Excellent. I'll, take a stab at this as well. That even around the globe is that the heavy emitters, the big industries, that we work within, and are probably on this call, not a lot has changed when it comes to certain standards and still the requirements around either the CSRD omnibus and for now with the United States and the EPA and some other things. Now, what we've noticed too, specifically in the US, is that now other states are following with California. They're not implemented yet, but they're in legislation has been written, but it's also in that proposal phase, like Illinois, for example. You have New Jersey and you have New York and other I think Massachusetts as well. Don't quote me on that, but you see other states that are following suit, specifically in Canada, becoming more strict within their emissions and their requirements within the states. So that's an interesting call out. And then secondly, with APAC, so I've worked with some of my Asia Pacific counterparts in those areas, and you see Singapore, Japan, China, and other countries that are now looking at legislation to lower emissions. And when they're using some of the CSRD standards and they're using some of the global standards as well. So you see a lot of Asia countries, and also within the Middle East, you have Turkey and Dubai and others, and also in Latin America. So people are following suit, and that, yes, there's certain hiccups in market that we see chatter online when it comes to government, but you see the rest of the world that are still very interested and are moving forward with not only regulations but also just standard of emissions reporting. So it's good to see. Again, focused on, we got to bring power to the people, right? And we have one of our piloted customers in Africa, that was their main priority, was to bring power to 30% of their country or their region that didn't have power, but simultaneously is ensuring that how they bring that power, they're simultaneously decarbonizing, and that's in the African region. And so it's still impressive to see that there's the priorities are there for sustainability.
Yeah, definitely.
All right, and I think that comes to the end here. Is that there's a lot of market changes, but there's also a lot of need and demand of getting more out of your emissions management software. And so here at GE Vernova, we do have emissions management called Sirius that really hits on a lot of these pain points and really bring you into that forward thinking and building out more stronger, more impactful strategies within your emissions management. So again, my name is Christy Pooler. Our contact information and LinkedIn information is available in the Resource Center as well. Everyone who registered and attended will receive more information and follow up regarding emissions. So email me, you can contact Beth, and we thank you all for attending. And I didn't see any questions in the Q&A, so I think it's time to wrap it up.
Christy, just one question that I see about asking to get a copy of today's slides, and I think in the resources section of the event screens, you will find a link to the full report that includes,
correct,
basically the excerpts and the slides that you had shown today.
Yeah, perfect. That's exactly right. So more details are in the report. Take a look at that. And that is all we have for today. Thank you all for joining, and have a great rest of your day.
Thank you.